Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Mish Schneider, Chief Strategist at MarketGauge.com. Hey, Mish, it's great to see you.
It's so good to see you, and I feel like it's been a long, long time since we've been together.
I know it does feel like that time is just accelerated through the fall. Everyone I talk to feels the same way. So it's crazy. So it has been so anxious to get your thoughts and everything. Just want to say before we jump in, hey to everybody who's joining on Substack and YouTube Live. As always, drop those questions and comments in the chat. And we'll get to as many as we can. And if you are not already, please hit that subscribe button. So sort of interesting today. We had mixed action in stocks. That the Dow rallied, but I think S&P looks like it's going to manage to eke out some gains, but the Nasdaq was a bit of a laggard, and I think that had a lot of people wondering what's going on underneath the hood. The other markets are kind of bonds, gold. Everybody's sort of forex in a holding pattern as we wait to see whether the vote passes to open up the U.S. government. But what did you make of the fact that tech lagged a bit today, Mish? I know you're watching that sector.
Oh, very much. Well, the good news is, and I always tell this to people, is the kind of explosive gains from April lows to recent highs was definitely an opportunity to take some profits. And we always encourage people to take profits along the way. And then, of course, have sensible trailing stops. So that's just risk management that a lot of people don't think about very much, especially the younger people who've come out of the 2020 scenario of trading and read the stuff on FinTwit or wherever, Reddit, and then just buy thinking things go up forever. So that's always the bigger backdrop, the biggest thing I can give for my many, many years of trading. In terms of AI and growth stocks themselves, I think it's a double-edged sword here. The good news and the bad news of what's happening or could happen from here. So we'll start with the bad news is that we all have heard the stories about the almost nepotism in terms of CAPEX and the big companies like Microsoft and NVIDIA and Google and Meta buying up all these other smaller companies,
Hmm.
in some cases even renting some of these other companies, which of course means they have a lot of money and the earnings have been great and all of that has been good. But the flip side of that is that why are they renting? Why are they renting these companies as opposed to buying? And is that because they want to be able to unhinge themselves from them if things go from bad to worse? We don't
Yeah.
know. But what we do know is that the CAPEX got out of control. The buzz more and more and more, and Maggie, you and I have been talking about this for months already, on the infrastructure needs, particularly the energy needs, is way going to outsupply what the demand is, right? I mean, what I'm saying is it won't meet the demand. There'll be an
Yeah.
undersupply. As far as building these data centers, are these data centers going to wind up being built to become big behemoths that stand there unused?
Mm.
So the AI, like everything else, people pile in and pile in and pile in and think it's like the never ending story. But just from a logical standpoint, you always know that stories change. So
Mm.
AI won't change, but the number of investors that came into it, the feeling that it never will go down. Obviously we've seen some big selling coming in. The Michael Burry story. Did it just get ridiculously overvalued and too concentrated? And 48% of the market is these stocks, really. So
Mm.
what does that mean for the rest of the market? So that's the double-edged sword. We don't want to see it collapse. Nobody does, because that would be bad for everything. But it can certainly take a comfortable back seat. And some of these companies, by the way, probably won't even exist in a year that we've seen so much in the news. But we also want to see the rotation into other areas. And that could be actually conceived as healthy, that broadening out that so many people have expected this year. And we haven't really seen it materialize.
Yeah, so maybe good news that the Dow is up. So when you're trying to figure out when you're trying to determine, I guess, the health of tech here, um, do you have to be a little bit more discerning? You just mentioned that, there's some froth clearly there. What do you like there? What are you watching for signs of concern? I know you're watching the technicals around ARK really closely. I don't know if that represents the more sort of non-revenue speculative part of the market. How are you thinking about that?
Yeah, I have so many thoughts. So let me see if I can actually make some sense here. In terms of AI, there are other opportunities besides what we're seeing in the companies that have really benefited from them, like Amazon and Nvidia and Google. Microsoft, by the way, looking pretty interesting right here. So you want to look to see what's expanding outside of AI. IBM has done very well. That's something I came into this year extremely bullish, made new
Mm,
all-time highs again today because of the quantum computing and because of the work that it's trying to do now with some of the tokenization as an
mm,
infrastructure. So I think what you have to think now is, where is AI expanding beyond just Gemini or ChatGPT? And that's kind of brings up biotech. I think has been explosive. I've been really bullish in biotech, not just from the ETF standpoint of IBB, but some of the areas. I mean, if you take a look, Amgen, Biogen have gone up.
mm.
And then what are the companies that are actually having more AI involvement with medical research? Those could be interesting. And a lot of them are still really beat up. That's what gets me interested, like an RX, for example, which is a company that is using AI for biotech, and yet it's still floundering in the market. So I think
Hmm.
this is a good time to start looking at those kind of areas, not the things that the high flyers that have already gone, but what could benefit from the advancements of AI that we know will are here and not going to go away. So those how I'm looking. In terms of the companies themselves, I mean, we still own Advanced Micro Devices. We got out of Palantir. We got stopped out on the way down, but we took profits on the way up. Same thing with Nvidia. And so we're really, like I said, now we're starting to look beyond, where does AI affect other areas. And I can tell you, it's not just biotech, but film industry and movie industry and music industry and art industry. And I don't have all those names at my fingertips, other than, obviously Google is
Mm,
the octopus head on all of them. But there
mm.
are going to be plenty of other companies that are going to merge in that area using AI, that first of all, will get rid of a lot of their employees and therefore have a lot more money to spend on making some profit.
Yeah. Yeah, that's such a great point, and it's so funny that you bring that up because I was, deep down the quantum rabbit hole, doing some research myself and, hopefully we'll have more on that. But there's some really interesting things going on, and, someone I was talking to brought up IBM, so it's so funny that we're on the same wavelength before we joined up, and we didn't even discuss that, Mish. But it is that sort of next wave, right, of AI that everyone's trying to figure out. You mentioned the layoffs, which I think is important. And hey, everybody, I see. So we've definitely got some questions about Bitcoin, which we will get to. But I wanted you mentioned the layoffs, and we're in this period where we haven't had any economic data, not any, at least any government data. It's been pretty sparse, and we may not get it now. They may just move on and not bother to release October data. That just hitting the wire today. But I know you track your own. You have your own metrics, and you have your Modern Family, which you look at. What are you seeing when it comes to the economy? Should we be worried about layoffs? How is the U.S. looking?
Well, it's so interesting because I'm a person that really always feels that the economic data we see may not necessarily reflect the present or the future, more of a reflection on the past, and then gets revised all the time.
Hmm.
As a person who follows price, who was, basically born in commodities exchanges where we didn't even get to hear any of that stuff until after the session was over, it's not really impacting me so much as far as my trading decisions. I have my themes, and then I have my chart analysis. And this is where the economic Modern Family is superior, because what we have right now reflects the bifurcation that people keep talking about. But at the same time, all things considered, with the labor and everything else, not in such bad shape. So if
Hmm.
we go down the family, the small caps, Grandpa Russell, not at all-time highs and going beyond like many people thought, but not really breaking down. It's like flirting with the 50-day moving average right there, right now. Maybe if it has a couple of days below and keeps turning over under 240, if you're looking at IWM, more of a concern. Granny Retail, well, that had a huge drop. And actually, I was really concerned because without the consumer, that's really where you're going to feel the labor issues, and you're going to feel the inflation issues, and you're going to feel the tariff issues. And you're really going to be able to tell, without all the statistics, about consumer sentiment as we're going into Black Friday and the seasonal, which is supposed to be very bullish. But what happened? Granny fell and found major support at a 200-day moving average, although it's been 25, 26 days under a 50-day.
Mm,
Caution, transportation, the other one that's really super important, actually doing pretty well, all things
mm,
considered. Regional banks almost left for dead with the famous cockroach line, but yet actually has bounced a little bit here. IBB, as we just mentioned at the top of the show, doing phenomenally well after years of lagging the rest of the sectors. And that leaves us with semiconductors and Bitcoin. So semiconductors, with all this negative talk, really is still only come down from the all-time high marginally. So, if you put that all together, you can actually, I think, be more bullish than bearish.
mm.
You just have to pick carefully. That's all. And then, of course, Bitcoin would be the last one in the family, which we call crypto. We don't particularly just focus on Bitcoin. And crypto is having its own little issues. Obviously, a lot of outflow. A lot of people lost a lot of money, thinking when it got to 108, 110 in Bitcoin, it was just going to keep flying. Now we're at 101. But I think, again, you have to look thematically. What's the opportunity? Is blockchain going to be real? Who's going to take over the crypto space? Is it going to be the CFTC versus the SEC? How far are they going to get into all of the digitalized economy? And is that going to be for real? Is somehow going to get screwed up with too much governance? I always go back to, it's a tween, right? It still doesn't know what it wants to be when it grows up. But we are still pretty bullish in some of the other areas on these dips: Chainlink, Solana, Ethereum, XRP, Ripple. I've kind of avoided trading Bitcoin right now and have looked out to infrastructure of it.
Super interesting. So, Mudashir asked, what do you think of, having said you're kind of staying away from Bitcoin, what do you think of the Bitcoin 4-year cycle theory? Are you paying attention to that, or are there some other things that you're more
Well, we
concentrated
had
on, like government policy?
Well, we had the halving in April, right? So it is fresh still, right? However, there's the crypto winter, which people talk about right now, that's happening. Yeah, I think I'm still very long-term bullish the whole space. Like I said, you have to be somewhat careful. Think of it as a commodity, which is why I think it's kind of ironic that it may actually wind up being under the auspices of the CFTC, which is a commodity commission.
Mm,
Um, and I think you really have to, like I said, keep your eye on what's happening in terms of, like the Genius Act turned out not to be very big for the whole Bitcoin and cryptocurrency space. What is it going to be that's really going to keep it not only in a decentralized place, but also really in terms of substituting infrastructure? Is it going to be stablecoin? Is it going
mm.
to be tokenization? I don't think we really know yet. I still don't think we know what it wants to be when it grows up. We know right now, though, it has a lot of potential.
Yeah. Yeah, so time frame matters there is what I'm hearing you say.
Right.
You're watching it from a larger secular story, but from a trading perspective, especially with Bitcoin, you're a bit cautious. A related question to that from No One Knows Thyself: is the recent Bitcoin peak and rollover a foreshadowing of where the Nasdaq could lead to, or has Bitcoin just lost its market share to gold? Good question.
I think the answer is both. And that is a great question, by the way. That is the question, because a lot of people were saying that if Bitcoin crashes from here and the whole crypto space, that people who have lost a lot of money because they don't know how to use stops and they just think that you keep buying the dips or are compounding when it goes up, that they're going to have to sell other assets to be able to meet their margin calls, right?
Mhm.
And that could be a thing. I'm not as worried about that as some other people are so much. In terms of the gold, yeah, actually, I mean, right now there's talk about gold and Tether being the stable coin being based in gold. And obviously, a lot of people, including myself, saw the gold correction coming. The big difference is that I started writing this last week, starting that it was time to get back into silver even more than gold, by the way, which is a whole other topic, but looking at gold itself, because I don't believe that there's any reasons to be bearish in gold, or silver for that matter. All the reasons why we love this for years, none of it has changed, right? We still have the possibility of geopolitical strain. We still have, an incredible debt situation. We still have the impact of inflation, we don't really know how it hits. It's very nuanced. You look at lumber, looks like a recession, but you look at copper, that looks pretty inflationary. You look at oil, agnostic. Um, the other areas of gold, the shortages, the central bank buying, all, the dollar, what's going to happen to that? There's all these questions that don't really affect Bitcoin that much. And I think that's even more the reason why people are still turning to gold.
Mm. Do you have a target? So it sounds like you like silver more than gold, or do you have a
Right now, I
target?
do. Yeah.
Yeah. Do you have targets for those? What are you looking at for levels people should pay attention to?
Well, first of all, I love to talk about the gold to silver ratio. And if you haven't read my daily this week, I put it out yesterday. It's really all about that gold to silver ratio because it's so important. And a lot of people don't understand what it means, and they should. So essentially, it's how many times gold is trading versus silver. And we know from certain levels whether or not gold is overvalued or silver is undervalued. And what happened with the ratio is earlier this year, around that April, when the market had its trough, the actual ratio went up to around 114, 115. You knew that wasn't sustainable.
Mm.
And so that came down. And once it broke down under 80 in October, it held a 2024 low at around 78, 79. So that kind of, when it started creeping up, was telling me that maybe the top was in terms of the gold market. And we got out of our gold. I mean, we did unbelievable in it. So I waited to see if that 85 turned down, which it did. And now that ratio is back down around 80. This is where silver starts to shine. And just to put perspective, in 1980, that ratio dropped to 24, maybe even under that. That's when silver went to $50 and gold only went to 850. So now we're talking in a different ballpark, obviously, in terms of price. Where does that put silver? Well, we made a new all-time high today. It probably came off a little bit by the close for some profit taking. I think silver can easily go to 75 or even 85 an ounce right now. That's kind of where we're looking at. And gold, even though it did not go to new all-time high, that's where the silver is the preferred. Also could be a sign of inflation that has been sort of capped at around 3.4. But since we don't know the numbers, we don't really know. That's why you have to watch. That means gold will go along with it. Maybe it gets to 4,700, maybe it gets to 5,000 if we see that kind of move in silver.
Wow. So we're still firmly in that up and to the right, it sounds like.
Yeah, well, silver has tremendous uses also. I mean, it's got a real narrative besides, gold obviously is a store of value
Mm.
and what people are flocking to in case, things get really bad in the world. But silver actually has, from mining centers, as a conductor, it's huge in electric cars and solar energy. And, it's an energy source. And it was also just listed as a critical mineral by the United
Yes.
States.
Yeah, someone just told me that list went from like 35 to 60, by the way, folks. With a recognition of all of the above when it comes to fragility of supply chain. So that's a really interesting. And we've got, of course, government involvement in that sector now in a way we haven't. So that's getting really interesting. Two other areas, because I know you're a commodity maven, uh, grains or DBA. I know you're always watching sugar. What's happening there?
Well, obviously, with the China announcement, that the deal that Trump made, soybeans went up, and that's in a bullish phase, which it hasn't been in a really long time. But we have to look across the board because that's very news oriented, and that's why I always turn to my good old sugar, my social unrest barometer, my inflation barometer, the third of my trifecta of inflation. And it's trying to bottom again here. Now, I've said that before, and then it disappoints. But I think you have to keep an eye on it right now. It looks like it held around 17 cents a pound. If you're looking at it, the December contract, by the way, I'm looking at futures. And if we can start to get back up around 1770 and higher, actually a close at 1770 will be the highest close we've had in a few weeks. Then I think you have to start thinking what happens to DBA, because DBA is holding up because of wheat and soybeans and corn. And so I think that DBA now, if we get a close, and I'm just going to put a specific number on it because that's the way I watch, 2680. I'd like to see a couple of closes above 2680, and then I think you might have a nice rally in that area as well.
Mm. And energy. So we uh named this on one of the spots, all hands on deck. That I think
Yes.
that's what you said in your note to me. So this is really interesting because we've seen the price, we've seen the action in oil. It's been lagging. This is sort of an unloved area, and yet we know it's so connected to the AI story. So it's been a bit I think confusing for some people. What are you looking at when it comes to energy?
Well, natural gas, we bought natural gas a few weeks ago, and so it was obvious that natural gas of the conventional energies outside of coal was going to get a bid. It has to be used for the energy sources that are needed. Um, we've seen solar energy. I mean, it's so interesting because solar energy was, the famous quote by Trump is that it's, one of the biggest scams, basically, of our century, is the need for alternative energy and some kind of a global warming or climate change. And yet it's being used as a source of energy. It needs to be used. And that's why we've seen these massive moves in something like First Solar, for example. So if we look at the other energy sources, obviously nuclear energy had its huge run, but it got a little ahead of itself. And I know you and I talked about that, a
Hmm.
little too ahead of itself. Is it the
Hmm.
future? Absolutely, but it's not being applied right now. And so where else can we possibly go? Lithium has been one. We're not using any kind of other water sources. We're not really using that. Even hydrogen, which by the way would be positive for sugar, as it's a big component of hydrogen power. None of that's really being tapped into yet. So that leaves oil. And the issue with oil, especially in this country, is that most of the oil that we get from extracting gets exported out because we can't refine a lot of it here. We don't have the refinery capacity. And I think that's the biggest thing that bulls in oil are holding on to right now,
Hmm.
is that the drillers are going to stop drilling because they can't afford to drill if oil stays too cheap, number one. And number two is, even if they did drill more, we'd have to send it out, and it wouldn't necessarily be able to be used here.
Yeah.
So that's why it's been agnostic. And I think if we can get two closes over $62 on WTI, whatever the reasons are, we'll see them emerge. That would be bullish for oil. So that's kind of what we're waiting for. But yeah, oil is kind of an obvious choice, but there's, supposedly a glut of it, and not something that people are using to power any of these data centers at this point. It's hard to get it there. You got to
Yeah, that's
pipeline
the
it
thing.
too.
Connecting it all is a
Right.
super interesting problem that I know a lot of the folks in the industry across technology and traditional energy are looking at. That's all that they're talking about when they're getting together at conferences.
Yeah,
Because I
and let's
was
think
there and
about
I could tell you.
pipelines, right, Mary? I'm sorry, I interrupted you, but
No pipelines.
pipelines
Yep.
themselves. I mean, we just had Exxon do very well, Chevron do very well in terms of earnings. I mean, these companies, I'm sure, are trying to figure out not only c- continue on their passage towards clean energy, but even how they're going to get the oil from point A to point B. And yet, California, which is where they were going to go for pipelines, they gave it a firm no. You are
Yeah.
not. You're not building any
Staying on
pipeline.
brand. Yeah, and refineries. By the way, the refinery issue is also critical minerals, right? Like the refinery issue is where the choke point for that everyone's trying to, I think, get around. And if you're rethinking reshoring, you got to have an answer to that. I wanted to ask you about EVs because I know you've been watching this space. This is another one where, with the political winds blowing, everyone was like, "It's not happening." I just came back from Detroit. From doing a conference there, and every single automaker said, they're navigating that change, but still believe EVs are the future. So that was super interesting to hear, when they're looking at the long term. But what are you looking into that space? Because are you still in it? You had it on your radar.
Oh, absolutely. I got a little frustrated with Rivian, and then finally, Rivian made its move. It got up to, pre-market up to 18, and it wound up closing somewhere in the mid 17s. That's a huge breakout.
Mhm.
I like to joke because I talked that stock up so much. I mean, pretty much since $10, $11. When are they buying me a car? But in the EV space, there's a couple of things one has to consider. Obviously, price is going to be a big thing, and how the consumer is going to feel. The top earners are the ones that are still out there spending money, and that's been
Mhm.
holding up the consumer space. And they can afford the 75,000 plus cars. But I heard an interview with the CEO of Ford, and I was wondering if that maybe that was one of the car companies you were thinking about.
It
He
wasn't, but
he's driving a Chinese EV car.
mhm.
And the reason why is because he wants to learn every single thing about that car so that Ford can make a $30,000 EV car. If that happens, then the second part, of course, is the charging stations. He's also talking to Elon Musk because they need Tesla charging stations. So we still have a couple of hurdles to cross here. One would, and that's the biggest one is the price, and then of course the ability to charge. I still here in New Mexico, if you are going beyond 150 250 miles and now you're in the middle of nowhere, you can't get your EV charged. That's a problem, and
Yeah.
that has to change, and it
I
will
think it's a
slowly.
mental also for people, it's a mental. It's like your second car, but again, then you're talking about affluent, and especially if the EV credits, tax credits have gone away, then you need to get into affordability and reliability in a much bigger way if you're gonna hit mass market, I think, but
And Ford said, by the way, that they're eating the incentives
mm,
themselves. They
mm,
are not passing that on to the customer. They're also eating tariff costs. In fact,
mm.
they said the biggest losers in terms of the tariffs are not the customers, but their employees, which I thought was interesting.
Ah, because the yes, the discounts they offer them, that might be where they're making it up. That is super interesting. Well, understandable, right? We've been talking about this, a couple people that have come on, that the average cost for people, like monthly cost for a car in the US, is a very US centric conversation, folks, is something like 800 to $1,000 or 700 to $1,000, which just seems so high to me if you think about anyone really who wants to pay that. So yeah, they've definitely got some hurdles. I want to we did get a question from Chad about Tesla. Thoughts about Tesla?
Well, it's trading what around 441, I think, is where the last I looked at it today. It's in a range. I mean, it keeps breaking out of the range and then coming back into the range. So I'm looking at like 400 to 450.
Hmm.
Tesla's not just a car company. I feel like that you always have to say that. Some of these calls for Tesla going to, like by Kathy Wood, you mentioned ARK before, but which, by the way, looks not so great right now. It's under the 50-day moving average. It kind of had its move. It's still 40% from where it was in 2021, that high. People have to remember disrupting stocks are great to a point, but her conglomeration of stocks really focused a lot on Tesla. Interestingly enough, she did sell a lot of Palantir. I saw that, but very crypto oriented. But getting back to Tesla, what she does say that I totally agree with is it is more than a car company. I mean, right? We just heard that the
Mm.
CEO of Ford wants to talk to them about charging. I mean, all the other areas that they're into in terms of the software, the automated cars, the self-driving cars. I mean, I personally can't wait for all of that to happen. So I don't think you can be bearish in Tesla at all. It's just a matter of controlling risk. And that's why at this point now, if it breaks out over 450 and looks pretty decent, I might take another shot at it. I kind of more actively trade that because when it moves and it gives you
Mm.
an opportunity to get out, and then whatever you keep on, cut your break even stop kind of thing. So you don't want to lose money after that.
Yeah, it's so important that you keep coming back to risk management, especially if we're going into a period where, that we have seen volatility increase and likely to continue to do that. So it's really important to sort of plug in and not sit back and be passive, but really actively take care of your
Well,
risk.
and there's two sides of that, by the way. There's the risk management, but one of the reasons why people in commodities make a ton of money when commodities start going is there's also adding to a position when you're in a move of parabolic.
Mm,
And I think that's another thing that people don't really understand. When something starts to go parabolic like that, like we saw in orange juice or cocoa, and then recently in gold, and now potentially in silver, you don't start thinking about getting out. You start thinking about adding to that position. And that's where the real money is made. So compounding is a thing. It's a legitimate thing. You
mm.
just have to really understand the difference between a small move and a parabolic move that's emotional, that's going to give you that momentum. And then you sell when the momentum starts to fade.
Yeah. Super, super huge dose of wisdom there, as always, Mish. I want to end with one, and I want to make sure we talk about this because you were so early on this, and I think you're sticking by it. But I want to make sure that we're always touching on it because as it comes to fruition, you deserve a lot of credit if it happens, is the vanity trade. So this is like off the back of GLP-1s, which by the way, we keep hearing about more access to. Maybe they're going to be, people are going to have access to them on Trump RX or whatever that site is, and maybe there's going to be a pill version coming, and we just keep hearing more developments. So, how are you feeling about that trade? Are you still in it?
Oh, God, I'm so bullish. I'm even more bullish now than I was when I talked to you about this a year ago when I coined the phrase vanity trade. Because they're projecting right now 50 to 100 million people in the US alone
Mm,
by 2030 will be on some form of a diet drug. I think that's conservative because what they're doing is they're looking at the obesity rates of about 37%. But I know people who are far from obese who are also on the diet drugs. And the diet drugs are doing more than just helping people lose weight. Obviously, with heart disease and diabetes being two huge benefits. But it's a cachet at this point. It used to be hush hush. I don't tell anybody I'm on GLP-1s, whatever they are. Then Wegovy, Ozempic, Mondaro. I mean, there's so many of them right now. You're seeing celebrities advertise for them. But at this point now, it's getting to the fact that we go, yeah, I'm on them. I'm on,
mm,
look how good I look. So to me, that is the domino effect. You are going to get so millions of people who stayed out of the consumer space on anything that had to do with health and beauty and supplements and socializing and exercising and hiking and all this other stuff entering that space. And that's where I think the real opportunity lies, not just in the drug companies themselves. AbbVie had a great day today. That's all, Botox and all that other stuff. Obviously, Eli Lilly over 1,000. Novo Nordisk is having a little trouble getting started, but it looks like it's going. Same thing with Pfizer and the deal that they just made recently, Viking Therapeutics. Those have all come up, but we still haven't really seen it affect the retail space as much yet. Rent a Runway was up 15%. I'm like, what? Yesterday. But, again, it's a temporary situation. And if you're losing weight, you don't want to get married to a wardrobe.
mm.
That's why I still like Stitch Fix. That's why I still like Ulta. Elf had a big beating, but I think maybe that was it. It was overdone. New Skin and some of the other places like that. Look at Peloton and look at Planet Fitness and really think. I always say the best advice I can give on that is find somebody, not so hard to do, whose life is changing and ask them what they're buying or what they plan to buy. Match.com, trying also to bottom.
Mm. Makes a lot of sense and kind of brings us full circle back to granny retail. Mish, I'm always amazed at how much ground we're able to cover, but that was fantastic and some really, really good advice. Thinking about not just what's in front of you, but sort of two steps ahead, which is what you got to do in this market. So thank you so much. It was so great to see you.
So great to see you too. And thank you so much for the questions and for all of you tuned in. Appreciate
Yeah,
it.
great stuff in the chat. And we will, of course, Mish was traveling, I was traveling, but we'll make sure she comes on soon again because people were like, "Where are you? We've missed you." And we have, so we'll do it again soon. Thanks,
Thank you.
everybody. Thanks for tuning in. We will be back on Friday with Dale. In the meantime, take care and good luck out there.